Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, January 3rd, 2023. Well, when you think it's going to clear up and we're going to figure out what the heck the market wants to do, it changes its mind and puts in a whole different type of a pattern. And it leaves us kind of in the lurch going like, what is it that you guys are really trying to do here? But what I can kind of come up with is that we still have to look at this being the completion point, right? So remember that I shifted it over from there to here, counting this now as a 5 down, that the 3, minute 3 of minor 1, minute 4 of minor 1, minute 5 of minor 1, completing this first wave down. Now, that would leave us to put in a minor wave 2, of which here are the fibs, the retracements. What it fails to get up much above is the bare bones minimum of 11,132. It's got up to the high overnight and this morning at 11,182. Thought, okay, good, we're on the way, we're going to get this done. Nope, finish, boom, slide, boom, slide, boom, slide, boom. What was it today? Well, they decided we don't like Apple, we don't like Tesla, we're dragging it all down. Towards the end of the day, okay, well, maybe we like some of the stocks, so we come back in and we start buying things like Metaverse. So it was a selective type of a deal going on today. And that's not really giving us much information in terms of like, well, what can we expect from the market? Where are things headed? And what does the Elliott wave tell us? Well, the Elliott wave tells us that we still remain in a downward trend. We still remain within what I'm continuing to call as an intermediate third wave. Once again, what's inside that intermediate third wave? 5 waves of minor degree down. So waves 1, 3, and 5 will be down. Waves 2 corrects wave 1. Wave 4 corrects wave 3. So we likely still remain inside this minor wave 2. But there is a shot that this possibly is done at that additional high very early this morning. And if that's the case, minor 2 would be here, demonstrating once again some very, very strong downside yet to unfold. Now, what else can I say? If we're really going to consider this to be the end of minor wave 1, and I put it back there, then this is an A, this is a B, this is a C. Maybe, I'm not sure what it is past all of that. Because the triangle pattern that I was discussing, it's like, wow, none of it is making sense anymore. So again, I open it up from here so we can take a look at what this looks like. So there's the high. I get a 1, a 2, but all is ever so very small. Again, hourly chart, but still very small. And then a 3, and then actually the 3 would come in here, a 4, and the 5. All of it very difficult, all of it very contentious in terms of market, but still got itself down there. Then we start to come up in what should be a fairly straightforward ABC. It's anything but. Now, granted, a lot of that all coincides with year end, then expiration. Then the day, we come back up as on Friday's expiration. We begin yesterday's by zipping up over 150, falling back, but then ending up above where we started, right? This, when Europe opened, then not going to like it. Then, oh, maybe we do. make another new high, and then once the US was open and in full force, just kill it. And actually come down below what I would have labeled as wave B of an ABC. So again, confusing. If we want to talk about what is our moving averages telling us, well, what do you think? I got a 200 that's flat, slightly angling lower. The 20 did convince everybody, yep, we're going down. The 4 and the 8, we're going down. The 50, will go down because I got a lot of pressure on my back from the 20. But it's not really giving us a ton of confirmation. Not when we take it down for 3 hours, then we buy it back up for 3 hours. We got to let it play out, folks. I am still considering the move itself a minor wave 2. If necessary, if the market tells me yes, I will continue to move this out. But for right now, I think I've moved it as far as I can go. This all has to be a part of wave 2. And if it's over, then again, remember what I said yesterday. If the market starts to come down, as if it's put in its high for minor wave 2, it'll just go. And that's pretty much what it did. Came to a screeching halt at 1 o'clock. Then they start buying it. You have to wonder, why would you step back in and buy it? But then again, order flow, where the orders are coming from, what might be trading in these individual component stocks. For example, Apple. How do I know? I can go over and take a peek. And just tell you, this is kind of what I will do when I'm trying to figure out why are they doing what they're doing. Well, if I take a look, well, I got a lot of puts. A lot of puts traded. If you're buying a put, you're going to buy the stock. That's the hedge. If you're going to be delta neutral, that's fine. Then you're going to expose yourself to a gamma squeeze, if anything. But you buy a put, you buy the underlying. That's the corresponding trade, the cover, the hedge. If you're buying a call, you sell. You sell a call, you buy. These are the hedges. So I don't know what the numbers were in that last few hours to say, well, they were buying a lot of puts or they were selling a lot of calls in Apple. Very well could have been the case. And then if I come back over and I take a look at Tesla, which got decimated today, down 15 and still heading south. 230 million shares. So what does this tell us? All these people that had to have Tesla last week at 120 to 123, suddenly today go, oops, that was a mistake. We better reverse all those positions. Obviously, 230 million shares. So this continues to be a very extended situation going on in Tesla. When you think it would be done because of year end, and those that want Tesla have already now put it into the portfolio and they're going to work it from there. That don't want Tesla, they took it out of the portfolio. But here we have, again, gigantic moves. Look at the calls. Look at the number of calls. The 120 calls, which now are just like, you better get out. Boy, did they. And then some. Look at the puts. 120,000, 110 puts trade. Look at the volatility. 110 on Tuesday. Now, they expire on Friday, but by Tuesday we've got this gigantic volatility. Now, 144 of the par, the Jan par, the Jan 100s. These are big numbers. And this is like a lot of positioning, a lot of getting out of stuff. And that's only just the Jan 6, the Jan 13s, a lot of trading. So again, And then just even the Jan monthlies, a lot of trading. So there's a lot going on in Tesla. And it continues to dominate what's happening in the NASDAQ and basically the Russell, and also the S&P sits in all those indexes. So again, it's not necessarily up to me or anybody, but what I can do is give both sides of this picture. To continue to build an upside picture is becoming more and more difficult, because even under a minor wave 2, I was like, what are they doing? So again, I'm just going to, because I do this once in a while, to come over and see. I look at the line chart. If you look at just a line chart, this would be 5 down from there, just like I had thought. And this is an A, a B. Still, at best, it doesn't count out. At best, we got 3 down. So to say what it is really difficult. Is this an A and a B and a C, and this is a D? Oh, huge. And it's breaking what should be the triangle parameters. So it's just going to crest and this is going to drop, and we're just going to continue down, because that's the case. It'd be 1, 2, 3, 4, and we get a 5, and then we got 5 down off that high. Minor 2 goes there. I likely call this the beginning of that minor third wave. And I will say it would be similar to what we're being told here in Northern California. Prepare for a storm that will be more severe than we here in California saw on New Year's Eve, with the wind and the rain. And it's not so much that we're going to get another good soaking of rain, but the ground can't absorb the water. So there will be flooding. There'll be additional flooding, and the winds will be stronger. So they're talking about toppling of trees. Okay, let's convert that over to the market. If we really look at this, it's like, okay, what can really happen? If the winds are changing here and we're looking for some stronger downside, watch out. Because if you thought they didn't like Apple today and decided that 131, that's what they tried to open this. In fact, they did. At 131. And immediately, this thing starts to hit the skids and was down close to 5 on the close. It's interesting. Now, Apple, because it's like, it's more than what the news said. Let's put it that way. Tesla, it just has now big problems. There are problems with the leadership, with the CEO/owner, with the cars, with production. So now the big question comes like, what numbers are they going to report, and what condition is this all going to be left in? So Tesla's got more serious problems and will likely continue to dominate the spotlight in terms of getting hit. And my job when I'm reviewing the index is not to go break apart and go like, well, let's go take a look at this stock and this stock and that stock, which should control at the moment what happens to this index. Whatever happens in those stocks will be put in through the index, of course, via the price. Now, what does that tell me? Here it goes. If we don't swing and head higher, breaking back above 11,060, and we end up holding here and dropping down and moving below 10,844, it will have completed 5 down off of this high. And that is not pretty. Then I would expect we will begin to accelerate, and we will drop more rapidly, more steady, with more force behind it. Because all of what's been going into this will dissipate and disappear. That's my take on what I see in terms of an Elliott and what my moving average is. And we could use a histogram. We could use an RSI, all kinds of things we could sit there and toy with. Now, I'm going to go out and let's take a look at these different levels to see where are our moving averages. Well, here's the 200 on the daily, way up here. But it is turning. It is now turning. The 50 turning. Everything in alignment on the daily to go down. 250, 20, 8, 4. And actually, I switched them around. 255, 20, 8, 5. I've left them all in fib numbers. All, yes, because of this little rally, I did kind of park it, get it, go this way, but you could see it's starting to roll. Let's see, it's starting to break. They're hooking back lower again. That's the daily. Let's go take a look at the weekly chart. What is that telling us? Here we have it. Flat as a pancake on the, look at how long this 200 on the weekly chart since May has been drawing a line across. We went above it, we came back below, drawing a line. And right now, all of these rally attempts, yep, we got above it, we crashed. We got above it, we came back. We got above it, we surrendered it. It cannot stay above that. Therefore, the market is not going to rally with any type of strength. The weekly is telling us that. Then, here we got this 50. Still working its way lower. But these pointing lower, this pointing lower. This chart is not very showing me anything too positive here, but I'll get a whole lot of people that are going to come in and tell me all kinds of things. And then we've got looking at the stronger, a longer period, where the 200 is much lower, but still flat as a pancake. We got the 20 coming down, getting ready to cross it. We've got the 8 and we've got the 4. Here's the 50 still up here. And I'm wondering why these are so far apart from one another. In fact, I probably should reload them and figure that one out, I guess. Now, last up, let's go over to the monthly. So again, we got the 200 all the way down here, but you can even see, now that's got a lot more power to it because it's max monthly and it's got a lot of time. But you can see that was the high and we stopped going up and now we're arcing. And if we start to arc down, this is all cooked on a monthly chart, not a nice picture. If we even come back up, this weekly, we closed last week to finish the year, sitting on top of the monthly 50. So I can open that even more. The monthly 50. We're sitting still right at the monthly 50. Actually closed below it for the day. Now the month itself is going to consist of course, a lot more time. Not presenting us with a very rosy picture. There's the 200 calling the children home. Come on back into the fold. The 4, the 8, the 20, all arcing now and turning lower. So our picture, according to our moving averages, is kind of backing up that it's like, it is not pretty. It does not look like we're going to be rallying back up super far. Even on my daily, okay, we might, if they truly can get it together and stage the rally, we got a shot at 11,300. But I'm telling you, I'm done calling it. Say, well, that would be a fib. We got the moving average. It's like they're not getting there. And I don't suspect that something's going to come in and surprise everybody and make it happen anytime soon. We do have some figures. We do have some economic figures. Today, we basically had PMI manufacturing, the final, and construction spending, those were green. They really didn't provide us with much of anything. Tomorrow, we do have the ISM manufacturing index at 10 a.m. Eastern. And then we have the FOMC meetings at 2 p.m. Eastern. They may provide us with something, but I don't think it's going to be anything we don't know because we already know what the minutes are. We know what the result was, but we might get more insight as to who was thinking what. Should we continue to lighten the amount that we raise these rates, et cetera, et cetera? So maybe we'll find out that, and someone's going to try to do something with it. I don't know. But ISM manufacturing will continue to give us a little bit of a peek or a gauge or a look into how manufacturing is handling all of this and what are they seeing and how are the orders going and what is coming out of that index. So that's tomorrow. On Thursday, we have international trade in goods and services and jobless claims, those both 8:30 Eastern. And then Friday, which is what I believe many are now waiting for whatever reason, because all you have to do is consider what's happening on the jobless claims to understand what's going to happen with the employment situation. But we have the employment situation for for December coming in on Friday at 8:30 Eastern, along with factory orders and the ISM services index at 10 a.m. Now, those are our economic numbers. What I think is going to really be happening is just like we're going to twiddle around and then eventually just drop, or I think we're going to pick up some speed and we will start to fall. Over in the S&P, it's exactly the same story. Once again, we found, let me go over to the hourly and then I can flip back to this daily. We got up toward 3907. That was the high. Came in the middle of the night for us here on the West Coast, 5 a.m. on the East Coast. So during the Globex session, we did go up. We made another high at 3907. Well, I was really thinking, hoping that we can get up to 3937 to finish this minor two. This may have completed it, because what am I looking for in terms of we're into the next move? Boom, boom, boom. That's what I'm looking for. So again, this was like just had to have it type of moment. And what do? The next hour, they slam dunk it. And then buy it up to the close. So it just gets bizarre. Now, moving averages, 200 is still pretty flat. In fact, look at that. Dipped, but then came back to get flat again. Why? Because they were buying it? Okay, that's what it reacts to. But here we have the 8, hard down, the 5, hard down, the 20, hard down, and crossing that 50. There it is right there, crossing it, sitting right below it. That may provide enough impetus to get us to drop again. So if we have a 1, a 2, and a 3, and a 4, and we come back down and we drift or drop below 38.14, it should put in an initial 5 waves down. Then this 2, I'll do it now, just because. I'm going to put it right there. 1, A, B, crazy C, crazy, but that might be the ticket. And that's where it sits. So once again, let's take a walk out and look at our moving averages. Okay, so daily. Well, what do we got here? Flat as a pancake at 4,036. Not moving, flat as it gets. The 50, flat as you can get. A 39.09. It got close. It gave it a good old look today. Could not get above it. Held. And then they sank. The 20 crossed the 50 today. The 4 and the 8 closed below both today. So I'm looking for them to continue to roll. If I put the 2 there, we're in for a very large drop. Now, I got to tell you, if I just take a look, bring this back out, I'm going to put in some fibs that would correspond to where the intermediate third can go. So again, we're just doing a review of things we've already done. So we have 37.55, 36.56, 35.84, 35.16, and then it drops quickly to 33.37, 33.38, 33.40. That is where wave 3 would be equal to wave 1. Well, that's not necessarily what I'd be looking for. I'm looking for this thing to continue now. Intermediate wave 3, I want it to be longer than intermediate wave 1. That's pretty much should be a given. Doesn't have to, but wave 3 cannot be the shortest wave out of 1, 3, and 5. So get in there and get to be the longest, at least against 1. But I have for intermediate wave 3, right, we're just looking for the minor third wave might come down to here. The minor third, and then a 4 and a 5. But I think overall, what I'm looking for the intermediate third is 3,000 to 2980. 3,000 to 2980. I'll even call it 3019, 3020 down to 2980. That completes intermediate wave 3. We get an intermediate 4, intermediate wave 5. We come pulling into here, which then brings us back out to those. I can't do that anymore. I got to pull it out to that weekly, to this. And that's where I'm looking for the primary C wave to kind of pull in and complete somewhere down in here, set us up for the cycle wave A to be completing somewhere down in here and getting that B wave going. So again, it's still a lot to do. There's still a lot of ground to cover to the downside before this would even be close to being over and setting us up to get that rally going. So right now, I'm still going to be looking for downside. Now, how do I want to trade that in terms of intraday? You got to play with what's in front of you. I can't possibly be looking at a market that's going to be moving. Here we go. Look at this. Look at these moves on that. Come on. On this 5-minute chart. There were plenty. You don't want to sit short here while it does that. So you play it. These are scalps. These are, even hold on to them for 5 or 10 minutes. You got in at 38. Let's say you got in when it broke, 38.25. You could have ridden it. You got at least $15, 15 S&P dollars out of it, 10 S&P dollars out of it. Good. That's a good trade. Then it got a little choppy and crazy. Makes it a little bit more difficult. But here we are. Opening. Bing, run this thing up to 3,900. Then bing, hate it. It's just, and they're difficult counts. But I'm going to put that 2. Now we got all this chunk. We didn't make it. Looked good, but we didn't make it. So I think we're working on that first 5 down as a start of minor wave 3 and intermediate wave 3. That is actually going to be it for today. Again, tomorrow we got a couple of numbers. Let's see what happens. Let's see what the markets really want to do. I personally am not positioning myself in either direction. I continue to try to follow the price action. And as a day trader and a scalper and everything that goes along with that, there should be plenty for me to do in an attempt to capture and make my goal for the day and be done. As far as trying to position trade or even swing trade this, there's just too much out there. There's too much out there that could switch this thing on a dime. And then it's just all done. So we'll play it as we see it. Next update will be on Wednesday, January the 4th.